Well, Tesla has gone even lower, making me look really bad. But that's okay. You know what? I'm going to triple down on this thing. It's at 186, I think. And I've done a chart analysis. It looks like the decline is slowing down, forming a bottom. So I'm going to do the math on that and find out what the average would be at this point. So sometimes, rarely you're going to buy and the stock is only going to go up. Stocks are volatile, especially volatile stocks like Tesla. And sometimes you're going to buy, it'll go up and then it'll go down. Sometimes you're going to buy at the wrong time and it's just going to crash. And if I would have bought it at 350 or 300, I would say, yeah, that was definitely the wrong time. But I did wait till a low and it went unprecedentedly lower, or at least for the last 2.5 years. So you can't really foresee those kind of things usually, although I did in my first public trade, public meaning I did it publicly on Facebook and blogged about it. I got in Netflix, and then Netflix just went sideways, and I said, I'm getting out. And then the stock did a 60+% drop. And then I recommended it at 921 or whatever. That's retroactive. I went back and looked. The actual amount for the stock was like 100 or something like that. But they've done splits anyway. So going back then, this was Netflix like 7 years ago. 2011, 2012 was when I got back in for the second time. And just leaving it in there, Netflix has gone up 3,500%. 3,500. So if you'd have put $250 in Netflix when I had recommended it in 2012, you'd have almost $10,000 right now. So that's what I'm saying. Tesla is the new Netflix. Is it going to have the same amount of growth? I don't know, but I know it's worth more than it's being valued at right now. Gosh, it's only been 2 minutes and 20 seconds, and it's getting hot in here. So anyway, I'm going to do the math and come back. Did the math on this, and originally I would have bought it for $261, but it went up to $271 by the time I made the video, so I had to go with that price. Then it dropped down to $234. I made another video and doubled down, averaging my price out to $253. And then now it's at 187. So I just want to teach you how to do this, or I'm going to teach you how not to do this. One of those things are going to be true. So tripling down for the purposes of this, we're pretending like all things are being equal. So I'm just taking all three of these numbers and I'm adding them and then dividing by 3. And that puts us at 230 even. So the new price is still well underwater. It's about $43 per share under, and that puts us at probably negative 20%. So total embarrassment there, and that actually reflects closely my actual portfolio. If I had more money to put in there that I wasn't prioritizing for other things, I got to get the car fixed on Monday, so I got to save some of that moolah for that. But whatever I have left over is going to go to other bills. So anyway, 230 is the new number, and I just wanted to get this in there while the stock was low because it looks like it's forming a bottom. It's still declining, but if that trend changes, I think it's just going to accelerate up, especially within a month when the next quarterly earnings statement comes out. Elon Musk is saying that he's going to make a record quarter. Now, I'm not convinced that's going to be true, but I wouldn't bet against Elon Musk. But if that's true, we'll be above water easily. And from there, I think I would think about getting out around 300 or something. You have to do a chart analysis, But really what I learned from Netflix, because I did make 100% on paper, publicly within 3 or 4 trades. 100%. So it went from a roughly... yeah, that's interesting. 130 to 160. But anyway, or not 30 to 60. But anyway, but staying in and just riding it all the way up because it was a long-term trend is a better one probably than getting in and out. But there's a nice compromise you can do with real money, and that is two different compromises. You can take some off the table when you think it's high, sell a few shares, increase your cash, and then get back in if it takes a slump, not whatever you're thinking. Okay, and then the other one is just buying on weakness. So when the share goes down 10, 15%, you buy more shares and you just keep pouring it up as it goes up. 3,500% is a lot. That's taking $250 and turning into $10,000 within 7 years. That's a lot of turnaround. And I expect to, you know, the strategy I did before, which I would get my 20% and walk away when I did this. And I did this for like 7-8 years. I got a long record. It's a pretty good record, but I limited my upside by walking away after 20%. And the only reason I got more than 20%, in some cases 47%, I think was the highest, and stuff, was because it just jumped radically overnight. And I said, good time to go, goodbye. Wow, it got hot in here fast. So that's what I'm going to do. I'm going to be a one-horse pony show with this Netflix in real life. I'm just going to put a lot of money into it. We might be coming into a recession. The market is reflecting that move today. Gold and silver are up. Oil and the SPY is down, including Netflix. See, I'm conflating Netflix and Tesla. Hold on. Excuse the noise, but this is unbearable heat. I'm on standby. So anyway, I like how it just goes to whatever random thing it wants to. I hope it doesn't mess up my sound. But anyway, I'm going to close this out, and I'll keep you updated if it moves. Again, if it goes down, I'll probably do another video. You know, going down and edging it out helps less and less each time, the way I'm doing it here. Of course, in real life, it's more dynamic than that. So anyway, later.